Alrighty, so I've looked at exercise 8.2, 8.3. They were fairly straightforward. However, exercise 8.4 is probably a substantial step up in difficulty. Not so much for the income statement, that's quite straightforward. However, the balance sheet probably is quite a bit harder than what we've looked at before. Maybe when we were looking at balance sheets, we probably did get to this difficulty, but they do add a few little extras to probably try to test your knowledge and sort of make sure that you really know it. So I guess let's read through and see if we can find the tricky points. So Jason Pollock is the owner-operator of Blue Pools, a swimming pool maintenance service. Jackson employs two pool cleaners and personally responsible for customer management and bookkeeping. On the 28th of Feb 2016, so note dates, particularly the harder questions. They always use the dates to sort of, I guess, test whether you know how to apply things, particularly for current and non-current. The unclassified balance sheet of Blue Pools showed the following. So this is our unclassified, as it's not classified into current and non-current, essentially. And we have our statement of receipts and payments for Blue Pools for March 2016. It showed the following information. So we have our statement of receipts and payments for March 2016. As we've covered before, we should be pretty cool with revenue and expenses. Additional info, small business prize was awarded by Stonington Council in recognition of Blue Pool's outstanding customer satisfactory rating. Cool, so we have that. Will that be classified as revenue? We will soon find out. So we need to prepare an income statement for Blue Pools for March 2016. So preparing the income statement is pretty straightforward. So once again, we'll be taking our cash fees, and for 13.8, and we'll be taking our small business prize. Why will we be taking it in under as fees? So it's not a part of the business, so should we be taking this as a revenue? Yes, we should. Although I guess it's not in his daily operations and it's a one-off sort of prize. Essentially, it does fall under revenue as it's a result of him carrying out his business. So although it's not directly attributed to it, if he didn't have this business, he wouldn't have earned that revenue. And it does increase his assets and increase his own equity, so it does fit the definition of revenue. So we can add that in now. So what was it? It was a prize, business prize, and we can put that in for $500. Cool, and we've got our total there, so that is 14.3. And less other expenses. So now we're looking at wages. Cool. Wages. Capital. There we go. Wages 9,500. And what else? Drawings, no. We always say no to drawings. GST paid, no. Interest on loan. So yes, interest is, loan isn't. So interest 250. Interest, loan, and that was for 250. And what else? So loan repayment, no, not the repayment, but interest, yes. Van expenses, so it's pretty much telling us straight out expenses. Clearly we're going to be putting that in. Van expense, and that was for 150. Yes, 150. Cool, and we need to total that up. That gives us a 999. There we go, 9,900. And we have our revenue less our expenses. So 14,300 less 9,900. That gives us 4,400. Cool. Explanation. So B, referring to answer to part A, explain your treatment of the small business prize. So once again, explaining include definition of what revenue is, and pretty much what I said before about although it's not a part of the ordinary operating of the business, it is as a result of him being in business. So maybe it's a bit confusing, but as I was already mentioned, so he isn't in the business of, I guess, earning prizes, but as a result of him being in the pool cleaning business, he did win that prize, and therefore he will receive an economic benefit. So phrase that however you will. C suggests 2 actions Jackson could take to reduce cash payments without directly affecting net profit. So how can he reduce cash payments? So let's look. So wages. Can he reduce wages? He employs 2 pool cleaners. Probably not. It's quite a substantial amount, but he probably can't reduce wages. Maybe he can do a 7-Eleven and not pay his staff. That is one option. Probably not though. Drawings. So maybe he could stop going to holidays on the Bahamas. That would definitely be, I'd say, one option there. So 3K, he could probably do without holidays. So 3K, reduce drawings would be action 1, I would say. And action 2, so GST paid, can't really affect the amount he pays in GST. Interest on the loan, he could negotiate with his bank, but really he can't do too much about the interest. He probably needs the loan repayment. He needs a loan, so you can't do much about that. Van expense, it's pretty insignificant. GST settlement, that's already been paid, so ignore that. And tools and equipment, so he's bought 4K worth of tools in addition to his already 27K worth of tools. So I would say that maybe he could, I guess, go a little easy on buying more tools and equipment. As is he really, I guess, progressing that much? Maybe he is, but ultimately tools and equipment would probably be the second action, because I'm not sure if he really needs to increase his tools and equipment by that much. I guess you could maybe have something different, but I would definitely say drawings 100% and tools and equipment more than likely, because but once again, if you can justify why you think, it's probably up to you. Prepare an appropriately classified balance sheet with Blue Pools as at 31st of March 2016. So we'll be taking this info from our non-classified, unclassified balance sheet and statement of receipts and payments, so we'll be sort of combining these two. So current assets, so it's only allocated us one little row. So what will we be putting in here? So we'll actually be putting in our bank balance at end, so 31st of March 2016, not this amount here, because that's the 28th of Feb. So we want our balance sheet at 31st of March. It's the most recent date where we have our bank balance, so 13,000 will be cash at bank. And we have 13,005. Oops, we put in the wrong one. XV. And non-current assets. So what do we have non-current? So let's look here. So tools and equipment, cool, 27K. But what happened between Feb and March? Actually bought 4K worth of tools and equipment. So 27 plus tools and equip. So what happened? He actually bought 4K. So we have 27 plus 4 gives us 31. So the reason I guess I put this over here was just because there's only one column, so I've already sort of totaled it. And we also have one other non-current asset, so van, which is 15K. And we combine those together and we get 46K. And total assets will be, what is it, $59,005. So current liabilities. So this will probably would have, I guess, got a few of you, I think, and you probably thought, why doesn't my balance sheet balance? And it's pretty straightforward when you think about it. If you recall to calculating GST, it's quite straightforward. So what we'll be doing is looking at our GST payable. So we have 360 here. But we've already paid this off. So GST payable, and we settled this amount. So we won't be looking at this amount here. But what we will be looking at is our GST received. So it was 1380, and we need to less that from our GST paid. So GST settled, that's been cleared, so that's all good. However, GST paid, we need to go 1380 less 415. So that's 1380 less 415, and that is, what is that? 1380 less 415. 80 less 415, 965 was it? No, 965, cool. So that is GST payable, that's, there we go. 965, so GST payable will be 965, so it's just, once again, it is, there we go. It is our GST received minus our GST paid, that gives us 965. The next one that probably will confuse a few of you is the loan. So we split up our loan previously. We've previously split up our loans, and I'm guessing that maybe a few of you are probably a little rusty when looking at this. But how do we split up our loan? So it tells us down here that Wizard is repayable in monthly installments of $500. So what will be our current liability? So how much will we be paying in the next 12 months? Loan, and who it's to, let's put in loan Wizard, and that will be 6K because we are paying that monthly, and within the next 12 months we will be paying 6K. So that sort of flows on to our actually let's give that total 6965. So that flows on to our non-current here. So loan, and once again it's Wizard, and the amount will be for 17,000. Will it 17K 75? So the difference, and because we've already paid off 500 from that amount, so 17.5. So I guess just to quickly recap, because we've got 2 minutes to quickly finish this. So we've already paid $500, and we're doing this amount for the for 31st of March. So we've paid off that 500, so discount that 500, and we need to pay the remainder. So we've already taken out 500, and 17.5 plus 5 gives us 18, and add that, so 624, so that has been covered, so it's all been accounted for. Sorry, I'm quickly rushing this now. So in our owner's equity, what do we need to include? We need to include our, let's go back up, there we go, so capital, so 32,140, capital, and 32,140. So we need to put in our owner's equity as our capital, and we also need to know that he contributed $1,000 here. Contribution, 1,000. What else? We need to look at our balance sheet. So he made a profit, so we need to add that in. So let's go profit, and that was 4,400. Cool. 400. Oh, can I do it? 30 seconds. But he also took out, what was it, 3K, less our drawings, and that was 3K. Add that total in. Cool, I just quickly cut the video because I ran out of time, but there it is, total 3450, and gives us our 59,005, which balances to our account equation, and we are complete. Cool.